Welcome back to my channel. My name is Victor. In this video, I'm going to be covering Meta. They announced their earnings today, and I have some fresh financial statements to look at and see how Meta performed for the third quarter of 2023. I'm going to be taking a look at those financial statements and reviewing those with you. I'm also going to do a discounted free cash flow analysis of Meta, determining what value all their free cash flows have in the future, as well as valuing the company based on earnings per share. I'll share that with you and hope you find it interesting. Do me a favor and like my video, subscribe to my channel, and more importantly, please comment. I love hearing comments from you on Meta as well as the video. So let's get into my process as well as an analysis of Meta. So over the years, I've developed my investing scorecard. It involves 4 questions followed by a decision to buy, hold, or sell. I first want to note that I want to be a part owner in that company and that I like the industry. And second, that the management team operates the company really well, that debt's well below 3 times EBITDA, and there's a good discount available on the stock so I could see my investment go up in value. And based on the answers to those questions, I'll make a decision to buy, hold, or sell. Now let's look at the earnings release information that Meta released just today. Let's start with the income statement. Revenue went up 23% if you look at the third quarter, which is excellent. Just great growth, 23%. Awesome. Net income really jumped up. It went from 4.3 billion in the quarter in 2022 to 11.5 billion in 2023. Earnings per share really went up, so that was a solid beat to what everybody expected. Last thing, margins. So margins are at 40%. These margins, I think they haven't been this good since about 2017, and the company was much smaller then. And even during the COVID boom that they saw with so many people stuck at home and on Instagram or Facebook, they saw margins really improve. Well, this is even better. This hasn't been this good since 2017. Looking at the balance sheet, they are continuing to grow the amount of cash and marketable securities that they are holding on the balance sheet, really having a treasure chest of capital for them to continue to grow the company or to acquire other companies. So combined, you have more than about $61 billion of cash on the balance sheet, and they have about $18.3 billion of debt. Now let's get into the statement of cash flow. This is the one that values companies, and it certainly values Meta. And cash flows have really increased. In the first 9 months of 2023, cash from operations went up to $51.7 billion, up from close to $36 billion in 2022. So a significant rise in cash flow from operations in the first 9 months. In the quarter, it pretty much doubled the cash from operations from compared 2022 to 2023. So great job there. Plant, property, and equipment actually went down a little bit. You know, they'd be trying to be more efficient over at Meta, not spending as much money as they once did, and that's a good thing. So overall, just a bump in free cash flow, which is you take cash from operations minus purchases of property and equipment, and you get your free cash flow number when you net those two out. I'll be using the net of those two in my discounted free cash flow spreadsheet, and I'll be annualizing the number because this is the first 9 months. So what I'll do is I'll divide by 3 and then multiply times 4. That way I can annualize the number, and that's the number that I expect for the year. It might be a little higher, a little lower for the full year. It'll be my starting point on my discounted free cash flow spreadsheet. So I updated free cash flows that I got from their financial statements on their earnings release. I updated my earnings per share that I expect for the next 4 quarters on Meta. And I have two valuations that tell me that Meta is discounted by 25%, meaning that each share is worth $374, but the market at the close of today's trading was trading shares at $299. So let's take a look at each method and see how I got here. First, free cash flows. I took the year-to-date, which I just covered in the statement of cash flows, divide by 3 and then multiply times 4, and that'll be the starting point of year 1. And for the first years, 2, 3, 4, I'm growing by 6%, and they can grow a little more, a little faster, might even grow a little slower, but they just have a high amount of free cash, which is great. But for me to expect them to grow that cash really quickly, like a 15%, that'd be really optimistic. So I'll just go with 6%. And it's going to grow at 6% up until year 4. Then after that, I'll grow long-term growth at 4%. And that'll be used for the terminal value, meaning all the cash flows I expect after year 4, the terminal value calculation is using a long-term growth of 4%. I'm going to use a weighted average cost of capital of 8.5% since interest rates have been increasing so much. Based on all these cash flows discounted at 8.5%, the net present value of those cash flows is $936 billion. I'm going to add the cash on the balance sheet and marketable securities of $61 billion and take away the $18 billion of debt. So I can get to a equity value of $978 billion. So the company's trading at less than that if you look at the market cap and the stock price. And it's really about a 25% discount if you compare where the stock price, calculates based on net free cash flows and where the stock is actually being priced. So it offers up a decent discount, especially on a super high quality company like Meta. Earnings per share, I looked at what is expected for the next 4 quarters, and that would be starting Q4 of 23 and then going 3 quarters beyond that. And it's $16.61. So that's a good number. PE of 30. They've been trading at 36, but I'm going to go with 30. So I think that's a little more conservative, and I'd rather go with 30. And a growth rate of 4%. And my calculation there, this is the discounting. This is how to discount all the free cash, all the earnings per share that I expect in the future. So this is the calculation here if you want to take a look at it and try it at home. Based on that calculation and the numbers that I just went over, each share is worth $372 per share using the earnings per share value method. But again, it's trading at $299. So using earnings per share comes out to a close number of 24% discount, which is close to that discount using free cash flows. Combining the two, you get to a 25% discount on Meta using both the discounted free cash flow method and the discounted earnings per share method. Looking at Meta, year to date, it's up 140%. So it's just one of the best stocks out there in big tech. So great job year to date. It's been really fun to see this stock rise. The after hours trading, surprisingly, the stock's down 3.65%. So it's been kind of a weird market. I think Alphabet was sold off today in today's trading, almost 10%. And their earnings, I thought, were good. The fundamental business is good. I'm also an Alphabet stockholder, and I bought shares of Alphabet. I also bought a few shares of Meta today. I'll take a nice discount, and it looks like I'm going to be buying shares tomorrow as well because I like down days. I like buying shares on down days when everybody's freaking out, just selling across the board. That's when I buy. So moving on. The stock has had a short slump here, but overall, I really like this linear path. I mean, this is a nice linear path. And Again, it's been a great producing stock for 2023. We'll see if he can keep it going. All right, so should I put more of my hard-earned money into Meta? Let's take a look. So I definitely want to be a part owner in Meta, and I like their industry a lot. And the company is operated by some of the best minds, period, in business, in technology, and most definitely the best run social network company on the planet. They don't really have any debt, so big check mark there. A decent discount, especially on a high quality company. So I'm going to be buying shares of Meta, especially on days when the market wants to give me a nice 3-4% discount, like it's showing in after hours trading. So that's my video on Meta following the earnings release they had today. It is an excellent company. I'm glad I'm a stockholder, and I'll be buying more shares, especially on down days. Hope you've enjoyed the video and found it interesting. Please leave comments. Let me know what you think of Meta, where you think the stock's headed, what you thought of the earnings report. I'd really like to hear that. And also do me a favor and like the video and subscribe to my channel. I'd really appreciate that. Good luck investing in 2023.